Good morning, dear students. So today our topic is Cadbury Committee on Corporate Governance. Now, Cadbury Committee, the name seems to be very much new to your people. So Cadbury means it's not a chocolate, it is a committee which is formed for the development of corporate governance. It is a set of rules and regulations to manage the corporate bodies. Now, when was this Cadbury committee started? Let's see in detail. The Cadbury committee report was submitted during 1992. Now, the Cadbury committee was set up in May 1991. So, it was to overcome the huge problems of scams and failures occurring in the corporate sector worldwide in the late 1980s and the early 1990s. So during 1980s and 1990s, there was a huge scam going on in all the corporate sectors where they were not maintaining proper records, accountings, and this was done not to pay tax to the government. They were reducing the tax payments to the government. So to reduce that, they were showing the fake reports and there was too much of scams going on, and due to this even the corporate sectors were facing the failures. So to reduce this, a Cadbury committee was set up during 1991. Now, it was formed by the Financial Reporting Council, the London Stock of Exchange and the accountancy profession with the main aim of addressing the financial aspects of corporate governance. So, the main intention was to reduce the scams and failures. A committee was set up in the London Stock Exchange by the accountancy professionals, and they addressed the main issues and the problems of this, and they formed a committee. So the main aim was to take care of the financial aspects and the problems which was faced by the corporate sectors and to reduce these problems. Next, coming to the contents of Cadbury committee reports. Now, when they conducted the Cadbury committee meeting, what did they discuss and what was prepared in this report? Coming to the first one, clear division of responsibilities of top management. See, in the committee they recognize that the scams and failures are happening due to there is no proper care taken by the top management people. So they divided the responsibility of each and every person in the top management, where if any problem arises or any scams and frauds arises in that sector, they should be answerable, accountable and responsible. So that is the reason they clearly divided the responsibilities of the top management people. Then position of chairman of the board. Next, see the chairman, what is his position and what is his responsibility, how should he conduct the board meeting, how frequently he should conduct the board meeting, and what all he should discuss in the board meeting was recognized and intimated to him. Coming to the third one, majority of board members must be outside directors. See, whenever there is too many insider people in the organization, it gives rise to frauds and failures. When there is outside directors present in the board meeting, it will give rise that the problems will not happen too much, and if there is any problem happening, they would try to recognize and rectify it. So they decided that whenever the board meeting is held, majority of the board members must be the outside directors. Coming to the next point, remuneration committees for board members. Now, the remuneration must be fixed for the board members. Otherwise, they might take up too much of amounts of the profits related to the organization. This also might give rise to the failures and scams in the organization. So, they decided that remuneration must be fixed. For this remuneration also a separate committee must be formed. Next, board should appoint an audit committee. See, if there is an audit committee, frequently they keep auditing the accounts and it will not give rise to too much of problems and scams in the organization. So, a separate audit committee must be present in each and every organization so that they can reduce this frauds and scams. Finally, it should include at least 3 non-executive directors. So, apart from the chairman, chief executive directors, board members and audit committee, remuneration committee, apart from that, they decided that 3 non-executive directors must be nominated for each and every board so as to reduce the frauds and scams. Now, coming to the next part, recommendations of the audit committee or the Cadbury committee. Now, first one, board of directors. See, the board should meet regularly. They should try to retain full and effective control over the company and executive management. Only then they can have a balance of authority and power, and no individual will be affected from the powers of decisions. Therefore, there should be a strong and independent element of the board. Next point, non-executive directors. See, they should try to bring an independent judgment to bear the issues, strategies, performance, resources of the organization. So, this can be done only through the non-executive directors who are nominated for the board meeting. Next one, executive directors. See, each and every organization should have a full and clear disclosure of decisions taken by the executive directors related to the reports, statements, etc. Finally, financial reporting and controls. So, it is the duty of the board to present a balanced and understandable assessment of their company's position in reporting of financial statements, and they should have a control on presenting true and fair picture of financial reporting. Whatever is exactly happened, only that should be presented in the board meeting. So, these are the recommendations given by the Cadbury committee for each and every organizations. If they follow these recommendations, maximum they can avoid the scams and failures happening in the organization.